Hello and welcome into the KE Report. Shad and Corey here, getting an update from Magna Mining, traded on the TSX.V under the ticker NICU, and on the OTC markets under the ticker MGMNF. And we're joined today with the CEO and Director of Magna Mining, Jason Jessup. And Jason, we got a lot of news flow to cover here. It's been a little while since we've had you on the show. You put out a lot of news just in the last couple of months that are transformational for the company. First and foremost is the news you put out on September 12th. And this is about the move to acquire a producing copper mine in Sudbury, the McCreedy West Mine. But there's also a lot of other properties in this package that you bought. The Levack Mine, which is a prior producing mine, the Podolsky Mine, which is a prior producing mine, and an extensive exploration package. So this is a big move. When we first started talking to you, you were an explorer. Then you went into a developer status. Now you've moved to the producer category. Jason, give us an update on this transformational acquisition.
Yeah, Shad, it's been a exciting couple months for sure, and it's been nonstop since Beaver Creek. So it's great to catch up with you and update all the listeners on what we've been doing. So this acquisition is something that's been a long time in the works. This just didn't happen overnight. To be quite honest, it was one of the transactions that was inspirational in really founding Magna back in 2016. Give them a little bit of background on myself and these assets. I worked for FNX Mining here in Sudbury from 2005 to 2011. And, the first part of that tenure with FNX, I was running the operations at the McCreedy West Mine. So I know that mine very well. We took that mine from about 300,000 tons a year in 2005, up to a peak. I believe we got up to about 720,000 tons a year in 2008. And then the financial crisis hit, things slowed down. I think we were on track to do about 800,000 tons that year. But then I transitioned over to the Levack Mine, which is right next door to McCready West. And it's one of the other properties that we've announced that we'll be acquiring from KGHM. And the Levack Mine was the flagship of FNX Mining. FNX discovered a very high-grade copper deposit, the Levack Footwall, later named the Morrison deposit after Gord Morrison. And, I led the team that brought that deposit into commercial production at Levack, and we were extremely successful there. So I know these properties, and along with that, there's, again, another 6 other properties that we'll be acquiring in the Sudbury Basin. So it's quite a portfolio, including a producing mine, the McCreedy West Mine. And our team, not just myself, but a lot of our team who are former FNX know these assets very, very well and made discoveries at them, developed them and operated them really successfully. So it's quite exciting to bring this into our other portfolio of properties, including Crean Hill and Shakespeare. Yeah, it's a lot to talk about, and hopefully we can get through it all on this call. But yeah, we're really excited, and it is a transformational acquisition.
Well, let's just quickly talk about the purchase price then, because face value here, you guys aren't paying very much for this. Just over $5 million cash Canadian, $2 million worth of Magna shares. There's also contingent payments of up to $24 million, but those come later. You're also negotiating a credit facility for $20 million Canadian. Just explain to us all the moving parts of the purchase of this, the credit facility, and what these contingent payments could be.
Yeah, and I guess to step back a little bit, we get asked a lot, how are you picking up these properties so cheaply? And it's a great deal. It's a great deal for Magna shareholders. It's something we worked very hard on. It was many, many months of negotiations to get to where we got with this announcement. But these are non-core assets for KGHM. KGHM is a very large copper mining company out of Poland. They have some tremendous mines over in Poland, and they are more suited to bulk mining, very large scale type operations. Not to say that these aren't large scale, but they're quite different than what they're used to, and they are non-core to KGHM, which is why they're divesting them. And what KGHM, we believe, and through our discussions believe, that they really wanted to find the right buyer for these assets that would be good stewards of these assets, that would reflect positively on them in the long run, and someone that would invest and move them forward, and believing that's what's right for the community and that's what's right for the workforce that's there. And really, we are the right fit. We are the logical buyer. We're in the community. I was out at the mine this morning talking to the crews at the McCreedy West Mine. We haven't closed the deal yet, but we're answering questions so they know what to expect, what's coming, and what our vision is for these assets. And it is great to be a part of the Sudbury mining fabric here. And we were explaining to the workforce there that our head office is on Kelly Lake Road in Sudbury, and our only focus is Sudbury. So McCreedy West will be our flagship. It is the mine that we will focus most of our attention on because it's our producer. So that's what they were looking for, and because of that, I think they were less sensitive on upfront cash prices and more concerned with reputational risk of making sure that it's in the right hands. So we were able to negotiate something I think that was quite fair, and I think it provides great opportunity for Magna shareholders, and this is what we've been working towards.
Well, and Jason, we were joking off mic that it's like you initially birthed these children, these mines, and these projects in FNX and watched them grow up. They went off to university and now they're coming back home, but looking to see what their place in the world is going to be. So how do you think you can take your knowledge of the past on these deposits and these mines and apply some of the modern day exploration that you're using at Crean Hill and at Shakespeare on this land package? And what can we expect, I guess, in a rough sense, from the production side of things?
Yeah, our team, that consists of myself, our COO, Jeff Huffman, Dave King, our Senior Vice President of Exploration, Munir Hoxha, our VP of Mines Geology. We all have experience working together on these properties during our tenure with FNX. And, I'll admit, when we first took these properties over from Inco, we were still understanding the geology of the footwalls, and it took a few years to make some major discoveries, but FNX made 4 major discoveries on 5 of those properties. And they made the discovery of the PM zone in the footwall at McCready West Mine, which still has a resource of about 1.5 million tons in all categories. And we made the discovery of the Levack Footwall, which mined from 2009 until 2019, is on care and maintenance, still has pretty significant historic high-grade copper resource, and made a discovery at the Podolsky Mine, the 2000 deposit, which FNX mined from 2008, and then KGHM put on care and maintenance in 2013. So, there's a lot of learning and a lot of knowledge over the years that the exploration team has developed. And over the last year, as we've done due diligence and negotiated this definitive agreement, in the background, our exploration team with all this new data has been, compiling that and developing targets, exploration targets that, quite frankly, there just wasn't the investment over the last 10 years to explore and look for new footwall deposits, especially these narrow vein, very high grade copper deposits, which is a bit of a unique style of mining. Again, very different from the skill set that KGHM has in what they do in other countries. So for us, we're going to apply all the knowledge we have from the past, from the discoveries that were made. And, with the team that does have that, look to make new discoveries in the footwall. Now, that being said, there's a very significant resource already in place. With announcing this deal, we came out with an NI 43-101 compliant resource on the Crean Hill property. So it's at about 9.3 million tons, and that's divided between 3 different distinct deposits at McCready West. There's the Intermain nickel deposit with about 2.5 million tons of resource at 1.6% nickel. And then there's 2 footwall deposits, the 700 complex and the PM zone. The PM zone, as I mentioned, has about 1.5 million tons still in resource. And it's a lower sulfide, high PGM type zone, a lot like the 109 footwall at Crean Hill. And then there's the 700 complex, and it's the bulk of the resource. It's over 5 million tons, about 5.2 million tons in the indicated category, at just under 2% copper, 0.7 nickel, and about 2.5 grams platinum, palladium, gold combined. So that is where the focus has been over the last couple of years of mining. In 2023, KGHM mined about 317,000 tons of this material through long hole stoping, bulk mining, at about 1.6% copper, 0.2 nickel, and approximately 2 grams of platinum, palladium, gold combined. So I can't tell you the exact economics of that because it is unaudited, but I can say that they were profitable doing that. When I look back on my experience back in McCready West at FNX. In 2008, as I said, we mined about 720,000 tons. And I think in some months we were, close to 2,500 tons a day. I think the last quarter we averaged about 2,200 tons a day. And right now they're mining 900 tons a day. So from the same depths, from the same deposits. So there's definitely potential to increase the production, we believe, with a little bit of capital investment. And that's what we're going to look at doing in 2025. So increasing production, with the goal of increasing free cash flows, and then being able to use those free cash flows to restart other mines in Sudbury that we're acquiring, such as the Levack Mine and the Podolsky Mine. So that's sort of the plan. And, again, I would like to speak a little bit about Levack Mine, which is a fantastic deposit and a fantastic mine itself. It had, up until 2019, it had operated almost continuously for over 100 years and produced over 60 million tons of ore from underground. So it's a monster of a deposit, monster of a mine. FNX, again, made that great discovery of the Levack Footwall. And in 2010 and 11, when I was running the operations there, we mined month after month of 8 to 10% copper, 1 to 2% nickel, and anywhere from 8 to 12 grams of platinum, palladium, gold combined. So super high grade from using 3 or 4 different mining methods, some long hole, some cut and fill, some shrinkage stoping. And, there's still a fair amount of that historic resource still remaining, and we will come out with a compliant resource post-closing on that deposit. But people go underground every day at the Levack Mine. They go down the shaft. Things are in relatively good shape. It's used as a secondary egress for one of Glencore's projects that's next door. So the restart there, we do not anticipate as being, capital intensive, and we do not anticipate it taking a long time. Most likely, we would aim at getting a plan in place for Levack Mine in 2025 as we're ramping up production at McCreedy West Mine, focusing on the copper-rich 700 complex where most of the resource is. And then, if all goes well, hopefully we would execute on that plan for Levack Mine and execute a restart in 2026. So the question I get asked a lot is, what about Crean Hill? And, looking sort of what the plan would be, out a few years, we are just as excited as we've ever been about Crean Hill. It is a spectacular project itself. So we do plan on restarting or starting the advanced exploration underground component at Crean Hill in hopefully the first quarter of 2025, which would consist of driving a ramp underground. And that's about a 15-month advanced exploration program, getting down to about the 500-foot level, test mining the 109 footwall zone, the 101 footwall zone, the intermediate zone. And then based on the success of that, making a decision to move into pre-production and then into commercial production post that. So if we started in 2025, we'd be looking at pre-production decision in 2026, and then getting into commercial production in 2027. Potentially at the Levack Mine, we could get into restart in 2026 and get into commercial production in 2027. And so when you put all that together, and again, I'm not going to tell you exactly what the costs are going to be for Levack Mine. We need to determine that. But, because we do have everything already sort of operational, we don't expect it to be overly capital intensive. And 2027, we could have 3 mines in Sudbury in commercial production, and then look at potentially restarting the Podolsky Mine, which is another one of the acquisition properties, which was a FNX mine that went on care and maintenance in 2013. And, potentially by the end of 2027, having revenues coming in from 4 different mines in Sudbury. And all of this without any massive capital needed. The biggest portion of that would be, according to our PEA on Crean Hill, about $45 million Canadian net of revenues for ADEX in pre-production at Crean Hill. So a lot of things going on, but we have a plan and lots of optionality and a tremendous amount of resource to work with.
Boy, oh boy, it sure sounds like it. And the key there, as you said, hopefully not capital intensive in the aspect that ramp up McCready West, generate cash flow from that, move on to Levack, then move to Crean Hill, and then who knows, maybe Podolsky as well. That's a lot of work for you to undertake. So let's refocus back at Crean Hill then, because shortly after that acquisition of the producing mine was announced, September 17th, you updated the PEA at Crean Hill. Some of the highlight numbers being the pre-tax NPV, 8% of over $265 million Canadian, as well as the internal rate of return of 142% at conservative metal prices. Explain what these metal prices are and further just highlight the low pre-production capital costs that were within that PEA, please.
Yeah, and we used $8.50 nickel for a long-term price and $4 copper, which we feel are very reasonable long-term prices. And those two metals make up approximately 80% of the revenues at the Crean Hill project, with the remainder being made up from cobalt, platinum, palladium, gold, and a little bit of silver. We've really designed this PEA with a much better understanding of the near surface mineralization, specifically in the 109 footwall, the 101, the 105 footwall. And that's really a lot of our focus on drilling has been since acquiring the property in 2022. So we updated the resource as part of that PEA, and it sits at about 18.4 million tons of indicated resource at about 1% nickel, just under 0.9 copper, and again, about 2.5 grams platinum, palladium, gold combined. So a large resource. And in our PEA, we're mining just over 10 million tons of that at a peak commercial production rate of about 2,200 tons a day. It would be ramp access. And what really allows us to have that very high IRR is the fact that the ore body does come so close to surface. And this is how we were able to take that 20,000 ton bulk sample. We completed this summer at Crean Hill and was processed through Glencore's Strathcona Mill at the beginning of September. So as we drive this ramp down, we'll be able to access levels, starting very shallow as 30 meters below surface, and start this test mining again in some of these really high grade areas quite quickly. And that's sort of the beauty of it, where those revenues will come in, can get reinvested, and this is what results in a very high IRR. Now with more capital spend, we could speed things up even more by putting just more development towards getting everything in place and ramping up quicker than the 25 months we've outlined in the PEA. But I think that's the approach that's right for us as a junior mining company, bootstrap and reinvest those revenues back into the mine. So we're really pleased with the outcome of that. And one of the things that this acquisition has brought to the PEA that's not reflected into it is the potential for other synergies between the acquisition properties in Crean Hill. We had designed the PEA as a standalone project that would have all of the supporting services that a mine needs. It needs, an HR department, it needs an environmental department, a health and safety department, it needs procurement and warehousing. With the acquisition of these KGHM properties, including the McCreedy West Mine, we will have these departments in place operating at McCreedy West. So there will be we believe, some shared services. Department heads can be looking after both the Crean Hill project and the McCreedy West Mine. And that should be able to help us reduce some of our G&A costs, as well as there's some redundant equipment at Levack and Podolsky Mine that could help offset some more capital costs at the Crean Hill Mine, where we don't necessarily have to go and buy a new sample tower, for example, and mine power center and some of our surface ventilation fans, because we already have these at the Podolsky Mine that we may be able to use again to help further reduce some of these capital costs. So we believe there's a number of potential synergies. We haven't quantified all of those yet, but these are some of the things we're working through over the next couple months. But it fits together so well. Having all these operations within easy driving distance of each other, with our company headquartered almost in the center of this complex of projects, does have tremendous synergies and ability to share resources.
Well, Jason, I'm glad you went there because I was going to ask you that exact question. Is there any overlap or synergies? And so I'm glad you outlined how some of the staffing in different departments, but also some of the infrastructure and equipment from the acquired projects could also be a boon to Crean Hill. And I also want to circle back to what you mentioned about the bulk sampling and the trial mining that you've been doing there, that you've been processing with Glencore at their Strathcona mill. That's that 109 footwall zone. But you also have an agreement, and so maybe this is confusing to people, with Vale, the other big major in Sudbury, to process some of the other ore from the Crean Hill mine. So maybe just speak to how those two relationships also play into the development scenario at Crean Hill.
Yeah, so we pride ourselves on having very strong relationships with both Vale and Glencore. And for listeners, each of those companies, which are large major mining companies, have large mills in Sudbury that are fed by, multiple operations. But at this current time and for what the foreseeable future is, are very much underutilized. So there's a lot of excess capacity there. And so these mills are looking for feed. And, Magna is one of the logical sources of feed for both of these mills. So in an ideal situation, we would like to supply ore to both of these mills. McCready West, for example, has agreements with both Vale and Glencore to sell their ores. And it does keep a little bit of competitive tension out there. It, I can say it does work in our advantage, I think, when we're discussing with them. And really, that's what we did with this 109 footwall bulk sample, is we wanted to see how does it respond, gather a number of data points as we process this through their mill as a batch. So, it went through as 20,000 tons during a 5-day period where we could have sampling done. We could run it at, different parameters, different concentrate grades, knowing we're putting in different feed grades from different parts of our blast. So we can see how their mill would treat our ores at different grades and, at different parameters. And once we collect all this data, what may come out of it is we'll be able to have a recovery curve calculation that could allow us then to enter into a long-term agreement, and perhaps just on the 109 footwall area, perhaps on additional ores. But it allows us to create that long-term agreement and have parameters so they can blend it with their ore then. And then we would do similar to what we do with Vale. We would sample it before it leaves our property. We would provide it to their mill. They would blend it with their ores. And based on the grade of each 2,000 ton lot, we would get paid based on this recovery calculation. So that was the purpose of doing that bulk sample. And it's really a first step in developing a long-term relationship with Glencore. Upon the closing of this acquisition, we will have that relationship already through McCready West. But yeah, it's great having options in Sudbury and gives us some flexibility. And in long term, we'd like nothing better than to work with both of those mills and supply feed to both of them.
Now, does this recent acquisition change any of that strategy moving forward, or have you even expand those relationships with either of those parties?
Well, we're always talking with Vale and Glencore, I would say pretty much on a weekly basis. There's lots for us to talk about. There's a number of other projects and deposits in Sudbury that we would like to talk to them about, and we may have discussions on. These assets that we're acquiring are not the only non-core assets in Sudbury. What works in our favor, and I think works for everyone, is to have more ore mined in Sudbury and processed through these mills and supplying the 2 smelters that are in Sudbury. So, we're going to continue to talk and we want to build deep long-term relationships with both Vale and Glencore. And I think we fit a nice niche here in Sudbury, being a junior company with a generally an overall lower cost base and cost structure than the major companies. We can be a little bit more nimble and do things a little bit differently. And in some ways that gives us an advantage to move on projects that might be too small for the major companies and just not material enough, or we can just have a lower cost structure, which makes them economic where otherwise they may not be. So these are the kind of discussions we hope to have over the coming years.
Well, Jason, another theme I want to weave in here is the polymetallic nature of these deposits at all these projects have you with really robust nickel grades, and you were first and foremost seen as a nickel company, but there's a lot of copper in these projects. And then to the point you've made with some of these footwall zones, a lot of PGMs, platinum and palladium, and then also gold and even some silver. So what kind of a company is Magna Mining? Are you a copper company? Are you a nickel company? Are you polymetallic? How would you define it for people trying to follow along?
Yeah, that's a great question. I would say at this point, when we close this acquisition, we're going to be a copper company because our revenue will primarily be driven by copper, as it has been with KGHM over the last couple of years. Now, we do have great optionality with nickel. For example, at the McCreedy West Mine, the Intermain nickel zone, as I mentioned, which has about 2.5 million tons of resource remaining. It was mined up until 2008 pretty extensively. It's had a minimal amount of mining since then, as it hasn't been the focus of Quadra FNX and KGHM, which are both copper companies. So they've been looking at the copper more than the nickel. But then when we see the next bull run in the price of nickel, it is quite easy to turn on the nickel production again, especially when we don't have our own mill. We can just sell that to Vale or Glencore. So it gives us tremendous optionality when we see another run in the price of nickel to just start up nickel mining again. And even at these prices, at those grades, it probably makes sense to take a good hard look at it next year and perhaps blend some of that into the production profile. But, I would say most of our revenues are coming from copper. Now, if I was to, sort of quote Mark Cutifani from Valley Base Metals, they say Valley Base Metals has a nickel division, which would be Thompson and Voisey's Bay. It has, their copper division, and then they have their polymetallic, which is Sudbury. And Sudbury is really polymetallic. If you looked at it, across all commodities and across the entire basin, Sudbury is almost 1-to-1 copper to nickel and percentage-wise in the ores, and then with a significant precious metal byproduct. So, we benefit from copper, nickel, platinum, palladium, gold, cobalt, silver, but most of our revenue will be coming from copper. And I'm going to tell you, most of our exploration will be looking to find more high-grade copper in the footwall.
All right, let's also talk about the most recent news release, and that is the company. It looks like going down the road of receiving some funding from Natural Resource Canada and the Critical Minerals Infrastructure Fund. Up to $1.6 million could be received by Magna Mining after some final due diligence. What could this money be used for? And Jason, what could this lead to in terms of potentially even future funding here?
Yeah, so we were pretty excited to receive an email from the Natural Resources Canada for the Critical Mineral Infrastructure Fund applications that we had submitted. Just found out last Friday that we would be receiving some of these funds that we applied for. And there were 3 separate applications we submitted. There was the power corridor studies for the Shakespeare Mine, road upgrade studies for the Shakespeare Mine, and the power connect to grid power studies for the Crean Hill mine. Now, so this is sort of the first step in the Critical Minerals Infrastructure Fund, is funding to get studies in place, which would allow for an application for the second stage of funding, which is actually to fund a portion of the construction of this infrastructure. So that's what we're going to do with these funds, is we're going to complete the studies to understand exactly what needs to be done, make sure that any amendments to permits or additional approvals that are needed are in place. And then we would look at applying as early as Q1 of next year for the funding to actually go, and specifically in the case of Crean Hill, connect to grid power. We have a very good plan in place. We need some detailed engineering to complete that. But then that, hopefully would lead to, additional funding to actually bring that power line in place. And it's only a couple kilometers. We're sort of surrounded by power lines and power infrastructure at Crean Hill. So it's not going to be a huge capital amount, but it could be millions of dollars to help us get that in place. So pretty exciting. It's great to see our government here in Canada, being so forward thinking and, helping invest in the infrastructure that's going to ultimately create more critical mineral production, and it will create more jobs, especially in the Sudbury area. So yeah, we're pretty thrilled by the announcement.
Yeah, Jason, you guys are really firing on all cylinders. You've made a key acquisition of a whole package of properties here, a couple past producing mines, one that's already producing, lots of exploration upside. You got a PEA that you put out at Crean Hill. You've done a bulk sample where you're getting it processed at Glencore, and I assume would get paid on that in the maybe the quarters to come. But then you've got all of these other things weaving in, and now you're attracting the Canadian government attention and getting some of that critical minerals funding. So important that the countries are finally waking up to the importance of the mining and the supply chain. So, a lot of news on tap, I'm sure, for the company. And for those listening in that want to follow along with the news, definitely click on the link below this interview. It takes you right over to the company website, straight to their news section, so you can follow along as more news hits the wires. And Jason, keep us up to speed. We'll get you back on for an update, and looking forward to our next conversation.
Yeah, thanks a lot, Shad. It's great getting on here and giving you this update. We won't wait so long next time.